Hi viewers, welcome to my channel. Today we will see a topic in tax filing, is ITR1 versus ITR2. So let me take a scenario. So till last year, I'm a salaried person till today. Until last year, I was getting salary and income was my primary source of income. And this assessment year, meaning last financial year, I got some income from sale of debt and equity oriented mutual fund. So now this assessment year, now I have to file my tax. So I was till last year I was filing ITR1 as my income was purely from salary and interest. And now this year, it's additionally, I also have the capital gain added so through the sale of debt and equity oriented mutual fund. Then I just got some confusion around it. Okay, which form is suitable for me, whether it is ITR1 or whether it is ITR2. So if you are also into the similar kind of an situation and you are looking out, searching, trying to find out which ITR form to choose to file your income tax for this financial year, then this video may be helpful for you as I have come across the similar situation. Okay, and to start with, you all know that the ITR selection, whether it is ITR1, ITR2, the selection is purely based on the different sources of income. So you, when as in when the different incomes comes to you, and whether you are an individual, whether you are a business or business doing a business, and you are receiving a business income, and the limit, what limit your income is, so based on that the ITR form would be selected. So probably you might be knowing this already. So now in the scenario which we have taken, so my case again it is a salary, interest plus capital gain. So what is capital gain and what are the different sources of capital gain? We can see in another video. But here the source of income is mainly from sale of debt and equity oriented mutual fund. We are not considering any other investment instrument, only the sale of debt and equity mutual fund. And if you want to include, then we can also include the securities that if you are selling out some shares, or so in that case that also can be included here. So with this source of income, so this is what actually, right, it is this is just for learning purpose, as I initially put on my disclaimer. So how I have learned through and how I am filing my tax. So if your case is very similar to mine, then it might be suitable for you. If it is not, then we may have to explore further. So this ITR1, the income source is mainly for salary and other sources, savings account and interest from FD. So if you have these incomes from these sources, then I meaning it is very primitive or very simple income, and the amount is lesser than 50 lakhs. So then you are an individual. So then in that case, you can the ITR1 would be the right choice. So what is this ITR2 all about? So what we said in ITR1, so this is for completely the individual, like you assume the different group of account types are there, like individual and HUF, and then business categories also there. But mainly this we are discussing only for individual type of taxpayer. So the individual now, as I said in the ITR1, we have the different income sources that applies, if that applies, and then along with that, if you also have capital gain from short or long term selling through equity mutual fund or debt fund or any listed securities, meaning any shares which you're buying and selling, then the right option for you as an individual is ITR2. So ITR2 is not just cover only the income from the income I listed in number one and number two. It also covers different types of income. But for a simplicity or simple discussion purpose, I just have taken only the category or these groups mentioned in one and two. So mainly when you choose the ITR2, the salary and other sources of income would be mentioned in the salary schedule, and then the other income, other sources of income also we have a separate schedule. So for the capital gain, for mutual fund, if it is short-term capital gain, then the short-term capital gain will be to be reported on the schedule 11A or triple one, that triple one A. And then if there is it's only the mutual fund, sell of equity mutual fund can only be reported in yeah, triple one A short term schedule. And we all know, and if it is a long term capital gain, long term capital gain, then we have other section. And say in the same, it is for sale of equity, the equity mutual fund, we have both short term and long term capital gains. So similarly, for when you take a regular debt mutual fund, what we just saw is for short-term capital gain, which are coming in the sale of equity mutual fund. In case of if you are selling a debt mutual fund, then this is not applicable, meaning the triple one A section or schedule cannot be used. So what is the advantage of triple one A section is the income short-term capital gain which you are getting will be taxed in 15% of 15%. But if you are regular the other category like debt mutual fund, if you are selling, then that amount will be added to your total income. So based on your the tax slab, if it is 30% tax slab you are in, then the debt mutual fund amount what you have got will be added as additional income, and it would be taxed as per your slab rate. But the triple one A provision helps get their tax on 15%. And the similar case is applicable for the sale of the listed security, like any shares which you are selling out in the financial year, and you it has to be if it is not a long term capital gain, and it has to be reported as a short term capital gain in the list of securities, then you have to choose the section 11 or schedule 112A. So that's all for today's topic, and hope this could be helpful if you are a very early stage of looking out what type of form you have to choose, ITR1 or ITR2, then it may be helpful. And if you have other income and other type of transactions in the mutual fund and security, so before choosing the final ITR type, consult with your tax advisor and proceed. Thank you for watching my video. If you like, subscribe. Thank you.